Stocks are hitting new records as the short squeeze unfolds. Members only will get this topic today. Pullback might be likely, and we'll discuss the put-call ratio analysis. And Chinese stock market is rallying as the Communist Party has declared more stimulus. Copper is also breaking out on building expectations, possibly in China, possibly in Ukraine, possibly elsewhere. We will revisit a trade that we did a while back for Spotify Music. It's still open and it's now up over 187%. Congratulations to subscribers. Dollar is at new lows, but I think gold and silver could correct. It is just way overextended. And oil finds itself suddenly weak, and if it breaks below any lower, I think we could see a price of about $40 per barrel. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, September 27, 2024. Please don't forget to hit the like button, subscribe to the channel, make a comment. Last week I couldn't do the video. I ended up in the emergency room with a pneumonia, but I'm okay now. If you're a subscriber, stay tuned. We will cover, as I mentioned, put-call ratio, as well as other market breadth indicators, natural gas, which is breaking out, various ETFs, large cap stocks, and a whole bunch of various small cap and speculative securities, as well as gold related. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can find out more by going to the link in the description. On this chart, you can see those green, blue, red, and yellow lines. These are my indicators. All right, so we are breaking two new records. So previous records were here on 15th of July this year, 2024, and we started making new records on 17th of September, last Tuesday, and we basically continued again throughout this week. So this is again a classic short squeeze. How does it work? So let's just say that sometime recently you have convinced yourself that we're going to break down, and you shorted S&P 500, let's just say here on the 6th of September. I did not do that. I'm just showing this for illustrative purposes. However, clearly it didn't really go anywhere, and you needed to put your stop somewhere. So usually people say, okay, I'm wrong. I mean, normal traders, they say I'm wrong, and let's say they shorted it here on 6th of September, or even maybe on the 3rd of September. Somehow they caught the very top. And then they put their stop. Where do they put their stop? They put their stop above the previous records. So the previous records were right there on 15th of July. So normally you put your stop above it, in this case short stop, and say, okay, if I'm wrong, I'm going to close my position, when or if we get to the new records. We got to the new records on 19th of September, and most likely you have whoever have shorted it, you have covered your short right there, meaning that you had to buy on an open market the stock, in this case of S&P 500, that you have borrowed to sell short. And then what happens? Once you buy on open market, you cause the price to increase further and further. So this is a short squeeze, and most likely it will continue. So how did I get this number of about 10% of 500 points move up? Usually we measure the depth of previous pattern, and this is a pretty obvious V-shaped pattern, which is about that much basically. I'm going to show it. So it's about 500 points move, and this is about where I would say we're headed. So we're looking at somewhere around 6,200, very likely sometime in November, December. I mean, it could be earlier, it could be later, but this is a kind of like a normal projection that we can expect. And I think it's a very reasonable projection, unless, of course, something terrible happens. But we've been having terrible news from around the world for quite some time now. All of a sudden, Putin has threatened to use nuclear weapons again for the third time now, um, because he thinks that, it's usually a sign of a desperation. Every time they threaten to use nuclear weapons, that means that they're in pretty bad shape on the battlefield with Ukraine. So I don't know. I mean, anything is possible, but I don't know. Let's just hope he doesn't do anything crazy. So barring like that possibility, I think we could see stock market continue to melt up because of this squeezing out of the shorts. So basically, this is what I wanted to say about S&P 500. I wanted to also mention, well, Federal Reserve has lowered interest rates, and of course this has been considered a trigger for the move up. All of a sudden, without any cooperation or conspiracy or any kind of coincidence, we see news out of China. Chinese, I mean, technically speaking, they're communists, but is this real? Are they really communist anymore? I don't know. They're like basically the best capitalists on the planet, because they want their stock market to go higher. I mean, think about it. China, I mean, communism and stock market, they're like two different animals, So all of a sudden, they're saying that they're going to be doing more stimulus. They're going to relax the banking rules. They're going to be building more stuff. Federal, whatever their equivalent of Federal Reserve, Central Bank of China, is easing market conditions, easing money conditions out of the blue. Is it a coordinated action between Federal Reserve and Chinese Central Bank? I mean, it's a conspiracy theory, but it's not impossible. I wonder who is next. Japan, possibly. Maybe more stimulus out of Europe. But nevertheless, we're looking currently at FXI, China large cap stocks. I personally had a position in it, have still a position in it. Notice this upward facing arrows, 4 alerts in May, in June, in July, and actually personally bought right there on 16th of July. And I waited for a little while. I was waiting for something like this. I was just not sure when it's gonna come, but I knew that the Communist Party has two choices. They can either do what they're always doing, which is stimulate, build more stuff, and grow their economy to show that they're the best and the smartest and the brightest, and there's no need to compete. What I'm saying? Like here in the Western world, we have multiple political views, but there in China they just have one political view, and this is why they need to be basically correct or not at all. So in this case, they just keep doing the same thing over and over. They're going to be stimulating in various forms. Yeah, they have a huge problem with real estate. They have so much real estate that they have prices dropping, but that's okay. They'll just do some other stimulus. So they announced stimulus, and of course, I mean, it was just huge move, enormous, just gigantic. My position went up 20%. Now, if you had options, this is easily a 100% move. Let's say you bought options recently. This is easily a 100% move, and options are available for this Chinese share large cap stock. So what we're seeing right now is stimulus worldwide, and again, as I'm about to get to the copper, and I'm thinking that maybe we're finally seeing an end to the war in Ukraine and the rebuilding effort as a result. So out east, we're seeing China, Taiwan, we're seeing Hong Kong all move higher strongly, in South Korea as well. So I'm guessing that the trade will spill over locally as well as globally. For now, I'm happy. I would rather see this. So the other option for Chinese Communist Party was to militarize the society, similar to what's happening in the formerly Russian Empire, and now it's basically outright fascist state. So they could have militarized, and they said, okay, we are gonna go back to the times of Mao Zedong, and everybody will be serving their fatherland or motherland. And thankfully they didn't. They just decided to do the capitalist thing, which is stimulate the economy, and everybody is happy, and there's no need to declare any wars and patriotic fervor and all that. So for now, I'm pretty happy with what's happening in China. Let's do this instead of having another war. Which brings us to the copper. I'm looking right now at copper futures. So notice what's happening. We had several kind of like whipsaw trades. So it was copper was in an uptrend, since March of this year. We had two signals here back, one in May, another one in July. They didn't really work out, and then it sort of turned around, and we had two signals to the downside that really also didn't work out. So when I'm seeing this type of thing, we're seeing two signals that didn't work out to the downside, and all of a sudden it turns around and we see another signal to the upside. This is most likely going to be a good signal, coupled with the fact that, like I said, Chinese economy probably relies on things that are being built. So most likely they're going to be building stuff, and usually copper is required when they're building stuff. So hopefully this is a correct signal. We're going to see copper increase in price, meaning that there's going to be more demand for copper. Now, additionally, obviously, there was a huge amount of destruction in Ukraine and now parts of Russia, and they're going to need to rebuild in a big way because a lot of stuff was destroyed in Ukraine. Unfortunately, hopefully, the crazy person in the Kremlin will not use nuclear weapons, because if they use nuclear weapons, well, it's going to open a Pandora's box. Things could really go sideways, actually very quickly, worldwide. One scenario I heard is that even a limited exchange of nuclear weapons with using nuclear weapons could significantly change the climate in the world, and it would change it down. The temperatures would go down. Because of all the dust being released into the atmosphere, that would in turn mean that we'll have less crops. For example, less grain will grow, and of course, which parts of the world have very large populations, and that's India, China, Far East. We are looking at famine on unbelievable proportions. If there is even a few degree drop, in average temperatures and less sun to produce the grains. So the stakes are really very, very high at this point. So hopefully, we will, we as humanity will not use the weapons, and eventually they just become obsolete because there is some sort of a new energy source that will simply wipe out nuclear weapons launches when they're launched. For example, lasers using fusion power. Some of this futuristic stuff I understand, but bear with me. So for now, we're looking at copper futures. Hopefully, again, this is a true breakout, meaning that we're seeing at another round of expansion of building and expansion of economies around the world. Namely, of course, Chinese are big on building, so let them build. I'm okay with that as long as there is no war at this point. I wanted to revisit a trade that we have done here at Master Charts Trading, and that is for Spotify. So Spotify first went on a buy signal back in March of 2023. Then later on in August of 2023, I sent an actual alert. I have records of it. On August 28th, 2023, I would be buying Spotify. I unfortunately personally didn't buy it, but it was sent to my subscribers. If you bought it, there was no exit signal, so notice that the price continued higher without touching this blue support resistance line. So basically my stop would have been at this blue line and I would have still been open. At this point you're up 187%. So if you bought in 2023, theoretically you could have bought leap options that expired now. 187% could translate to, you need to add a zero probably, so over 1,000%, maybe even 1,800% gain for an option if you bought a option far out enough. Usually, I prefer to buy options that are what's called leap options that are pretty far out, like a year or more out. This way, you're not really constrained by time, and you can keep them for a longer period of time. So, great trade. Hopefully you are still in it. Congratulations. And if you're not yet a subscriber, consider signing up. Let's switch gears. We're currently looking at the dollar currency index. So until very recently, we had upward facing arrows, meaning buy signals. All of a sudden we turned around, most likely due to Federal Reserve action here back in August. Notice this downward facing arrow. So now we're in a downtrend for the dollar, and we actually just hit a fresh 52-week low, and this doesn't look good, honestly, unless suddenly we kind of stop falling and turn around. But I'm not 100%. It doesn't look great, to tell you the truth. We can look at the weekly chart, and the dollar. The next pretty good support for the dollar is a little bit lower, which is a July 2023 low. So it's possible it will sort of hold there. However, if it doesn't hold there, then we could see like a significant move lower. And again, we can estimate how significant that move might be by measuring the previous sort of pattern. It's like upside down cup maybe, which is with a depth of about 6%. So it's possible we're gonna go back down to all the way to the levels not seen since 2021, when we broke out into a new uptrend for the dollar. As a result of weakness for the dollar, gold has been on a tear and has hit all-time highs. So gold has hit all-time highs. We're trading gold. Notice this upward facing arrows. These are all mostly actual alerts. There's light blue arrows are actual alerts for gold. If you have my indicators, then you can just use my indicators to trade gold. So currently gold is quite overextended after moving, well, I don't even know where to start, but just this latest trade from about February of this year produced about 32% for gold. So it's quite overextended for sure. Now, when I say overextended, I also imply strong. So gold is showing strength because people are buying it even at this very overextended levels. Having said that, it's very likely that gold will take a pause. For example, for example, these were previous highs back in December of 2023. Yeah, we kind of went higher and then we pulled back, towards this blue support resistance line. So I would not definitely be buying up here under any circumstances. However, if gold pulls back, a good level to be considering buying would, if it currently pulls back, I would be considering buying at around 2,300. We're currently at 2,600. So if we pulled back about 10%, I would say that would be a good level to buy. So about 2,300 would be a decent level to buy once it has bottomed out. So this is why I'm saying that there is a chance that dollar will hold here, or possibly even just a little bit lower, because there are the lows from 2023 July, and it's quite possible that we will hold there. If dollar does indeed hold there, I think gold will pull back. Why? Because XAU divided by USD. Gold is traded in dollars, so if bottom part of this equation will get stronger, this will kind of pull this currency pair lower. A very similar story is unfolding with silver, albeit in a bit more volatile fashion. Silver is generally more volatile. Here is XAG USD. This is all-time high that was set just this week for silver. Same basic principle. Alert was sent actually here in late July. So if you are still holding, I would consider holding it. Possibly, I mean, we might still go slightly higher because, like I just said, dollar is not yet at a very robust support. Robust support would be just a little lower where I'm hovering currently, like maybe 1% or so away. So gold and silver maybe slightly higher, but I think a pullback is almost a guarantee at this point. Just very, very overextended, but at the same time very, very strong. So overextended to the upside implies strength. And finally, I wanted to wrap up with crude oil. So we'll spend a little bit of time on that. So here is oil firstly on a weekly time frame, and I'm gonna just kind of move it out of the way. So here is notice this area somewhere between $60 and $70. So I have put this rectangle there. So this is where we used to see bottoms. So notice there's a bottom here in December 2021. Okay, I'm gonna do that, it's easier to see. There's the bottom in 2021, and then several bottoms here in 2023, like March and June. Another bottom where I'm hovering was in December 2023, and currently we're there. So we kind of dropped into this area in the beginning of this month in September, and we've been sort of trading around that area. So we're currently around $68. So if we break below, I think this level is super important. So November 2021 lows, we're around $62. So I think if we break $62, then we could expect a move lower. Okay, where do we expect to move lower? So I'm going to just show you this pattern. So I'm referring to this pattern that started on March 2023, top in September of 2023, again bottom, and then so it's kind of like an upside down funky looking W. So I think that if we again, the depth of this pattern this upside down W that I just described from March 23 to about September 23, the depth of this pattern is around $30, so 33%. So I think if we break below November 2021 lows, especially if we close below those levels on a weekly basis, then I think we could easily drop to around $40, maybe even upper 30s for oil. And the news that I'm hearing is conducive to this. All of a sudden, OPEC, I think this was, I wrote here sudden weakness. So on this Wednesday and this Thursday, oil was kind of going higher, and I thought we are going to continue higher a little bit, but then all of a sudden we got this sudden weakness for 2 days. Today we sort of bounced a little bit, but we were really near the lows. And now I'm hearing that Saudi Arabia, all of the OPEC cartel people, even the word cartel, when you think cartel, you think drug cartel, but in this case it's oil cartel. So these people are like, oh, we're gonna pump more oil because we don't really care. We need more money. Okay. So if they're gonna pump more oil, clearly the prices will not go up. We have a glut of oil in the world. Places like China are rapidly moving away from oil with all of the electric cars that they're producing. Here in America, it's not as much visible, but yes, we're seeing move away from oil to a degree. So maybe this is it. If I'm correct and we break below November 2021 lows, we could see a rapid decline in prices for oil to the upper 30s, maybe lower 40s, area. What would it mean for various dictatorships around the world? More instability for them. Not that I have a lot of love for dictatorships, obviously, but yeah, places like Russia right now, yeah, it could see significant problems because it's basically an oil exporting nation. Places like Saudi Arabia may not be as bad, but other places which basically depend on oil for their economy, and this is the only thing they produce. This is kind of ridiculous. Their economy is not diversified. So it's just something to think about. We need to diversify, or whoever it is that is thinking about getting into oil business, and need to diversify, I would say, away from oil. So again, we're watching this level at 62. Let me just tell you exactly what that level is. $62.43. That was the low from November 2021. So if we break that low, I think look out below. We could see a rapid collapse in prices. Let me know what you guys think. Did you find my presentation useful? Do you think any of my price targets are unrealistic? Then head over to masterchartstrading.com, click on sign up for one of the products. So again, I have the trading indicators, these lines on the chart. You can trade pretty much anything under the sun. They're available for tradingview.com. Tradingview.com interface is free. So once you sign up on tradingview.com for free, come to my site, masterchartstrading.com, sign up for the indicators, and I will open the door for you so you can use them on your chart. Very easy. If it doesn't sound easy, I'll explain everything. If you want just a newsletter, so I send out daily alerts about the various securities we trade. For example, this week we'll be covering various ETFs, large cap stocks, speculative securities, as well as gold and silver related in the newsletter, and the members only video, which is coming up shortly. And of course, the best deal is to get both trading indicators and newsletters at $49.95 per month. If you buy the yearly subscription, this is equivalent of a monthly subscription. So you get 2 months free if you buy upfront for $599.95. If you don't want to buy upfront, you can buy a monthly subscription at $59.95. Free 7-day trial for everything. for all of my subscriptions. You can always convert later to a yearly subscription, just let me know. Again, thank you for watching and have another great trading week. Bye bye.